All right, my friends, Tom Willard back here with part 2 of this trading series. Let's continue with what we built on in the first video. If you've gone through the first video, we talked about where do you get ideas from. It could be TV, uh, you know, websites. Google is a great service you could use. Find ideas you like, and then, of course, you want to pick stocks. If you're day trading, like I said, the general rule I use is 1 million shares trading per day. And again, if you've got a small account that you're day trading with, and you're only buying a few shares here and there, and say you're risking a certain amount of money, $50, $100 per trade, then obviously with a small share size you can do something that's less that has less trading volume per day. But I would suggest try to stick with that because you want to be in there, in and out seamless. You want to be just a little gnat in the world, little fish in the ocean of whatever's trading for that stock, the big players in that day. You're just trying to catch little rides that come and go during the day, and taking your little pieces of profit along the way. So we've got our universe established. All right, so you've done your time, you've researched. You can easily, I even posted on the YouTube comments on the first video that you can just take the S&P 500, take the 500 stocks in the Standard & Poor's S&P 500, and just the NASDAQ 100. You pick those 100 stocks if you want, and then of course, based on your capital resources, you may not be able to trade something that's $100 a share or greater, or $500 a share or greater. You may not like the spreads. Some of those, Amazon's one that comes to mind, where the spreads can be large between the bid and the ask, and so you can get massive slippage if you're trying to be exact and refined with your entries and exits. At the same time, you could trade a cheap stock like a $2 or $3 stock, and where it's penny bid ask spread, and you've got a lot more volume, and you can be a little bit more assured that you're going to get out at the price that you want to get out at, whether it be on the offer, on a profit taking, or stopping out on a stop limit or stop market type order. So again, you've got to kind of work those things out for you and what you want. I know that in this time for me as a trader, I'll trade anything. I do trade Amazon. I don't worry about the slippage anymore. If anything, I'm using it to my advantage, and I'm playing the extensions and trying to hit my offers up because I'm not as concerned, and just basically go smaller shares on those types of trades. So when I get a good setup on something, I'll trade it regardless. Typically, some things I don't touch in general, but generally I will trade almost anything. And also, the other standard rule is don't be a desperate trader. It's a desperate person is not attractive to the opposite sex or the same sex, if that's your thing. So desperation is not good. Don't be a desperate trader. When you're trading, be laid back and say, look, I'm just, if it's not working, if there's something I don't like about this, I'll move on to something else. When you're trading equities, there's so many different options out there. You don't have to be pegged into trading or accepting something that you feel uncomfortable with regards to bid-ask spreads, volume, et cetera, okay? So we've worked through all that stuff, and we've established our universe. So let's go now talk about this next step. Look to buy stocks in an uptrend and looking to sell or short stocks in a downtrend. So what do I mean by that? Okay, up here you'll see this is my TradeStation platform, and here's my minder with my universal stocks here, and you can see it's the market just closed for the weekend. It's Friday afternoon. You can see that there's not a whole lot of stuff that was in the red here, and you can see the green starts here. Look how big my universe is. Everything was pretty much in the green in this universe today, pretty much all the way up to GIVO, which knocked out a 23.5% gain on the day. Not too shabby, but it's down quite a bit, over the last month and a half anyway. So it's just trying to recoup some of that. And we had a big update in the market. If we pull up the SPYs, in general, we've had a nice bounce here off this pretty hard 3-day down and a drain out here on the volume. Look at that as we come back up here. But I pointed out on my Twitter feed today that this volume here was lighter today. Typically on Fridays it can be lighter anyway, but I actually took some puts on the SPY. I initiated some puts on this going into the weekend because I think there's a good chance, and it may not happen, and obviously I've got my stop in at the top here. I'm willing to take that risk, that I think we come back down. I'm going to try to pull some profits if we can get down back in the 407, 408 range in the next week of trading next week, week of May 17th. So, but back to the concept I want to talk about. So we want to buy stuff that's in an uptrend and sell stuff or short stuff that's in a downtrend. So let's just take a look at a few examples here. Let's start off with, let's just do the SPYs here. Actually, we have the SPYs up right now. You can see that if on the 15-minute chart, what are we doing? We're in an uptrend because we've got the 20 period over the 40 period moving average. Okay. Now on the 60-minute chart, we'll see we're sideways, right? We've got the 20 period under the 40. It's flatlining, so it's indicating some sort of possible directional change. Could go back up, could go back down, but it's not really trending. And then here on the SPYs on the daily, you've got an uptrend, still intact, but the lows, the two previous pivot lows, three actually pivot lows, got taken out with authority a couple days ago. And so the question is, does this become a tornadic formation that I talk about where you get an expanding range of lower lows and higher highs? All right, where what we'll do is we'll go up and make a higher high, and you can play the bugle in that you can try to short something with a tight stop up here and try to ride it down to a slightly lower low, where we're breaking support and resistance back and forth, and milking that cow for that thing. And sometimes what happens is when a tornadic formation breaks out, what happens typically that I've seen is it'll expanding range, typically a couple legs on both sides. So actually this is it here, and what will happen is it'll bottleneck here and create a wedge, which is lower highs and lower lows within the range of the tornadic formation of highs and lows. And then when that breaks, one way or the other, you want to be on that train, whether it's up or down. Okay, it could be bidirectional, it could go either direction. At this point, we're obviously on the weekly chart exhausted to the upside, and this is looking toppy, but it looked toppy here, it looked toppy here, it looked toppy here, it looked toppy here, and what happened? We kept going up. So with each one that happens, obviously it wears out a little bit more, and the chances of a more significant retracement on the weekly, at least, good God, to the 20 period moving average on the weekly, becomes something that you've got to, there is a higher odds opportunity than going higher. But you can get cut to death, cut to pieces, trying to call tops in the market. So I say just play the trend. So on something like this, would I go long or short on the SPYs? Well, for me, like I said, I took a short at the end of the day on this. Because I like what I'm seeing here on the rollover. I like the expanded roads down. I like the low volume on the day up here today. Does that mean it's going to work? It doesn't mean it's going to work. But what I'm going to do is have my stop above these highs, okay? Or maybe slightly above here, depending on what happens over the weekend and how it opens on Monday. Now, here's a perfect example of something that I took today. I bought today, okay? And I talked about it, I think, in the last video. But if I didn't, then I didn't. Maybe I tweeted about it. I can't recall off the top of my head. And I didn't watch the last video prior to making this video. So what I talked about was this big engulfing day, and then we had this big gap up here, right, 2 days ago. And look, on the 60-minute chart, we came right in. Well, what happened? Okay, so let's analyze the time frames. Well, we're in a downtrend on the daily. We crossed the 200 period moving average. Both moving averages crossed the 200 period moving average. We had a gap down, very bearish, and what happened? An engulfing green candle on higher volume, okay, indicating a possible change in direction. Okay, comes up, higher pivot low, looking to buy it today on the break of the high of this candle here, where you saw it right here. Also, okay, X-ray down, you can get in earlier. What do I mean? Like buying it on the open here at 19, okay, today. Look at this pullback, 20 across the 40 period moving average. We're now trying to establish an uptrend. It doesn't mean it's going to confirm. Okay, it hasn't confirmed yet. We've just got one pivot. But an aggressive trader takes this trade here at $19. You could have waited for $19.50, which is fine. But $19 early, okay, ride it up. Now it's basing again. Possible cup with handle breakout here going into Monday. And a possible trend change. Now, initially, my first target I'm looking for more than this because it's so pronounced down. Look at the weekly chart here, okay, on how far it's come down. 25 would be my first least aggressive target, I guess. Looking for 25. Obviously, it could hit some problem. It have some problems here at the highs around 23, where it topped out here and it tried to get up here around 21 and change. I think 25 is definitely my first initial target on this thing. And then I think a better option would be to try to hold some if it gets up there, to try to ride more to the $30 to $35 area. You can see here, which could be minor resistance based on the bottom that was put in here in early 2021. Okay, so Fubo is a perfect example of trading the trend on the 60. Okay, now we're trading opposite of the trend on the daily, okay, but I'm looking at a possible trend change here. And this thing, and what it really drives home for me is the 60-minute chart. When I'm day trading, now listen to me closely. When I'm day trading, to me, the most important chart to be aligned with, okay, if you want to trade with during the day or even like overnight for a day or two, is this hourly chart, the 60-minute chart, okay? That is what I find to be one of the best guides for directions on whether you're trading long or short. And this one to me was a no-brainer to the long side. And again, it could open up at $5 a share on Monday, and I'll get my butt handed to me, and it could happen. Or it could open at 30 a share, and I could be swimming in it tomorrow or Monday. But what's more likely is going to open in this area, and hopefully it'll continue. And if it doesn't, then guess what? My stop is going to be this pivot here around 1750. Okay, so that's where my stop is on this pivot on the daily. Now, it could come back down, take that out, and then set up around 16 and go back higher, and that's fine. I'll get back in. What do commissions cost nowadays? Pretty much nothing, right? So get out. If you're in question, get out, get back in. It's actually free, right, pretty much from a commissions perspective. So don't ask any questions. Just get out and assess it from the sidelines. All right, let's take a look at another stock here I'm in, and I've been adding to my position long over the last couple months. And you can see here off this low on the weekly chart, we started moving up, and this thing has been on fire, and I think it's going to go to all-time highs. And like I said, I'm adding to the position. I just added to the position right here in this area. And again, why did I add it at 68? Because again, what I'm seeing, we're uptrending. Look at this. You've got these uptrend 20 over the 40, crossing over the 200 on the daily chart. We're making higher highs. We're making higher lows. Weekly chart, also, we had a long uptrend where we kind of corrected, the moving averages curled over, and then we had a new low, reversed back up. You can see a kind of an inverse head and shoulders here. We're breaking higher here, like a double bottom, if you will, breakout here. Okay, so what you'll find too on the 60-minute chart, like I was talking about earlier, how it's the main driver behind what I'm assessing and putting on radar for the morning. Now again, I may have, typically what I'll do is on my evening scan, and it'll carry over from the previous day, I'll have 30, 40 stocks that I'm interested in the next day. But I may get up in the morning, and what I'll do in my pre-market scans before the market opens, and obviously, most things are trading before the market opens, so you can kind of see what the action looks like. But I'm looking to see if it's doing what I think it's going to do in support of what my bias is based on the charts. Okay, so let me repeat that. I am looking at it to see how it's behaving in the morning, pre-market as well as early morning, in the way that supports my bias based on the charts. And if it doesn't, and if it's shocking to my bias, I will look to trade it the opposite way, because I'm not the only one. I didn't invent technical analysis. I'm just a student of technical analysis. And if I have a bias, a lot of other people probably have the same bias. That's why it works, right? A lot of people are following the same thing, and they're buying the same areas, support areas, and they're selling at resistance or extension or extrapolated moves based on previous moves. Whatever the concepts may be, a lot of people out there. This isn't hocus pocus magic. It works a lot of times because it's followed. So when there's a shock to the system, it could be earnings, it could be, something happened with the leadership of the company, whatever that is, and there's a shock, there's a lot of value in that. And you can, instead of being upset that your bias is not correct, change your bias, right? It's not about being right, it's about making money. It's not about being right, it's about making money. So can you do that? Can you reverse your train of thought and say, look, it's not about being right. I'm not going to, be down on myself because my bias looks like it's going to be wrong, and I'm going to try to force this square peg in a round hole, and I'm going to go long because my bias is long, or vice versa on the short side. No, you just got to go, look, there's probably some other people shocked with this as well, because it's completely changing the direction of what classic technical analysis is teaching with regards to direction. Take advantage of it, man. Just short the damn thing or buy the damn thing. Well, whatever it is. Just don't get married to your bias, okay? So being a desperate trader, getting married to your bias, these are the hallmarks of someone who's going to have a very short career if they do not learn from their mistakes. Actually, if you don't learn from any of your mistakes in trading, you're not going to have a short. You can probably last longer in business than you can in a classic business sense. Than the market is not forgiving at all. You can have a bad day in business or working and still get your salary, but you have a bad day in trading, you can lose everything. So you got to be on top of your game at all time. To me, this is one of the most challenging things, but it's also the most enriching, as well as I don't know. It's invigorating. It's to me, is the best thing to do. One of the best things to do, in my opinion. But again, that's me, and this is not for everyone. And I know that for a fact because I've been doing this for long enough. And I can tell you, this is not for everyone. If you cannot control your emotions, if you cannot look at this in a statistical way, and get your ego wrapped up in it, then trust me, this is not for you. You will lose all the hard earned money you made from other ways of making money. Do continue to do what you're good at. Don't do this. If you're an emotional person who cannot look at things objectively and think in a statistical manner, then this is probably not for you. So Newmont, whenever the price is in an uptrend like this, when the 60 and daily are supporting the same trend, usually when it pulls back to within the 20 period to 40 period movement in this area in between, it's buyable. So I'm looking for opportunities to buy it on the 15-minute chart and the 5-minute chart. Okay, finding ways to get it, or you can trade the 60-minute chart if you're longer term. That's how you're looking for things. So let's look at another example real quick. So at the risk of being unpopular, Disney, for example, has been in a long uptrend on the weekly. Right now, since about March, beginning of March, it's topped out. Topped out around $200 a share. See, it's been in a slow slide down to about 180, and then of course we had earnings last night, I believe, and today. What happened? It gapped down, but guess what? People bought the gap. They bought it. I mean, it sold off initially. People are scared in general because of what happened earlier this week, I think, and sold out. But then buyers stepped up, and there were more buyers, people that wanted the stock than sellers, because that's the only reason the price ended up higher from where it was at any point. So people supported the price. Now, what am I doing? Well, I didn't trade this today, but it was on my radar because of earnings. I didn't see an opportunity to trade it. Obviously, hindsight is like, oh, I should have just bought it when it went down to 170, but there was no technical reason to, and I had other things I was doing. So what about for next week? Well, look at what's happening here. Okay, so we've got a daily chart that's been in, or weekly chart's been an uptrend, and it's actually in a buy zone here, right between the 20 and 40. So you say, okay, that's bullish. You look at the daily chart, so well, wait a minute, this is actually rolled over. So it's actually looking like it's beginning a downtrend. You've got room to the up rising 200 period moving average. Okay, so this is kind of a wash. This is kind of neutral to bearish in my opinion. It's not bearish, it's not bullish, it's not bullish neutral, it's more bearish neutral. I'm leaning more short. That brings me to the 60. Well, the 60, look, we've got railroad tracks here between the two. An aggressive move down off the gap. It's come back up. I'm looking for a retracement to this area between the 20 and the 40 period moving average, and a market that's, listen to me, and a market that supports going short. Okay, and I'm looking to short this sucker. Again, that may not be popular with some of you, you may be on, but I would be looking to short this on a day trading basis, meaning that for the day, maybe for a couple days, because a lot of times this does not mean we're going to go back up. I mean, this was actually a very bullish day, but again, the market had a bullish day today, right? The market was very strong today. So this one went up, but right now, that's why shorting things when they're far away, that's what I'll talk about on the other slide with regards to gravity trading, okay? Shorting stuff that's extended like this is really dangerous because you got to have large stops and your targets are small because the prices typically can't move for a very sustained amount of time way away from these moving averages. They always regress back to them. They typically always do. Not always, but eventually they always do. I can say that, but sometimes it takes forever for them to do so. I mean, case in point is UPS, I believe. Is it UPS? I think it was UPS. Yes, look at this. Again, I didn't own this, unfortunately. I didn't trade it. I've been trading it, day trading it, long and short, since it started doing this. Okay, but you can see how extended it got, right? So if we back up this chart, just to see what it looks like. I mean, look how far it is from it hasn't been this far from the 20 since it started this breakout, and this is what will happen. So don't be amazed by this, like, oh my God, I can't believe this is such an anomaly. I'm going to short it. No, this happens. Okay, and what happens is people are getting short and they're piling short here. And what happens? What are we getting now? We're getting a base. And if this thing continues to hang out in this area and this catches up to it, and the market is conducive to going long, I'm going to tell you right now, you should be buying this. Don't get caught up like, no, it's extended, I got to short it. No, because what it's done is corrected through time. So the moving averages are always, to me, that's why I don't have a lot of the other stuff on my charts. The moving averages are key. You want to watch those in relation to price. All right, I've gone long enough on this video. We covered a few of the major concepts around buying and shorting, 60-minute chart, 60-minute chart, 60-minute chart, pound it in your head, market environment, use your universe. I'll catch you in the next one where we'll talk more about details around the gravity effect and how to trade things that are kind of sideways. All right, until next time, have a great weekend. Trade well, follow your plan. Catch you in the next video.